आज आया आपका
लॉन्ग टर्म ऑफर आया था
कॉटन कुर्ती
लेडीज के है अच्छा फ्लैट 70% भी
ये एक आदमी कुर्ती
कुर्ती
1650 का 299 और क्या है जो देख लो तुम्हारा
शॉपिंग जा रहे हैं
जाना चाहिए
Good morning, girls. May I audible to everyone?
Good morning, ma'am.
Yes,
Yes,
ma'am.
ma'am.
Yes, ma'am.
Okay, so from that time, you people were very busy in the assignments of the FIT, I think so.
Yes, ma'am.
Okay, ma'am. Now come to the accountancy part. Yesterday, I have given two definitions and meanings,
Yes,
and
Yes.
have completed
Bookkeeping and accounting.
Yeah.
Yes, ma'am.
to the explanation. What I explained yesterday?
Yes, ma'am. You have explained.
Concept and conventions we were
Con-
in.
I
Vouchers and concepts and
Vouchers. Vouchers, accounting system, double entry system,
advantages
single
of
entry,
the advantages.
advantages and disadvantages,
okay.
accounting principles.
Okay.
You have to start from accounting principles, ma'am.
Accounting principles or accounting concepts?
Accounting
Concepts.
concepts. Concepts.
Business
Okay,
entity
okay.
concept.
Okay. So right now I'll explain about the concepts to you. See, as there are some concepts are there, but in the textbook, how much he has given, that much I'm explaining to you. Like I'm covering that only. So coming to the accounting concepts, first one is the business entity concept. 1 minute, girls. I'll start the video. So coming to the concepts, first one is now.
Yeah, it's fine.
Okay, so coming to the first one is business entity concept. What is the meaning of business entity concept? Means in accounting, business is treated as a separate entity, different from the proprietor. What is the meaning of this? Means generally, whenever the people will do the business, what they will do means every time they will maintain the accounts as per the business, not as per the proprietor. Like whatever expenses or whatever incomes they are getting for the business, that only they will make a record of that. Suppose if the proprietor is using anything, that record they will not make in the accounts. Again, I'm repeating, coming to the business entity concept. As per this concept, business is treated as an separate entity different from the proprietor. So whenever they will follow this concept, at time what they will do, they will make a record of the transactions which has been taken place in the business, only which will affect the business, not the proprietor. So here the business and the proprietor are the two different entities. It means that two different parties. So whenever the transactions are recorded, they will see from the point of the business, not from the point of proprietor. Suppose, generally I'm giving one example. Suppose if the proprietor is purchasing a new car. If the proprietor is purchasing a new car, whose expense is this?
Proprietor.
Proprietor expense. It is not a business expense, no? Suppose
Yes.
if the proprietor is purchasing the car and if we will make a record of this it as an expense, then it will affect the business, no? It is not a business expense, no? Business के लिए अपन खर्च नहीं करे ना ये पैसे,
Yes.
Yes.
नहीं खर्च करे ना, वो प्रोप्राइटर उनके ओन यूज के लिए उन्होंने खरीद लिए वहां पर, तो या बिजनेस के लिए पे इफेक्ट नहीं पड़ना, मींस दिस इज नॉट अफेक्टिंग द बिजनेस. दैट्स व्हाई दिस टाइप ऑफ ट्रांजैक्शंस वी शुड नॉट मेक record. Proprietor is different and the business is different. Am I clear, girls?
Yes, ma'am.
Ma'am,
Any
if
doubt?
it is expending to purchase any asset of the business, then it will affect.
Yeah.
Yeah.
One more example also I can give here. Suppose if the proprietor is paying his son's college fees, then it is a personal expense of the proprietor, no?
Yes.
That things we should not make record. Okay, the next one is dual aspect. See, for dual aspect concept, we can call it as a dual aspect concept also. One more name is accounting equation concept. Otherwise, we can
Double
say it as
entry
a
system.
balance sheet concept.
Yes.
Dual aspect concept, we'll call it as a accounting equation concept also, even the balance sheet concept also. As per this concept, every business transaction has a dual aspect. Dual means two.
Two side
Double
of
entry
account.
system. Yesterday we have discussed about the double entry system, no?
Yes.
It is similar to that only. So as per this concept, every business transaction has dual aspect, means two aspects. So every
Giving and
transaction,
receiving.
Two sides.
so every business transaction results in receiving of some benefit and giving some other benefit. Example also we have discussed yesterday, like suppose if a business is purchasing the goods for cash. So what we are doing here, we are purchasing the goods by giving the cash. So when we are purchasing the goods are coming to the business and cash is going. So one is receiving benefit and one is a giving benefit. So every business transactions involves two aspects of equal value. So whenever they will make a record of these two aspects, then it will come under the dual aspect concept. Am I clear, girls?
Yes, ma'am.
Again, I'm repeating, as per this concept, every business transaction has two aspects. One is receiving aspect and one is the giving aspect. As I've given the example here, suppose if they are purchasing the goods for cash. So whenever they are purchasing the goods are coming to the business and cash is going. So one is receiving aspect and one is a giving aspect. So whenever they are making the record of these two aspects, then they will have a complete information of the business and it is nothing but it will come under the dual aspect concept. So here dual aspect concept is expressed in another form also. Again, I'm repeating here, dual aspect concept is expressed in another form also. How we can express means in the form of equation, it is nothing but, here I'm writing, as you can see, it is nothing but capital is equal to assets minus liabilities. We can express in the equation, it is nothing but capital is equal to assets minus liabilities. Otherwise, we can write as capital plus liabilities is equal to assets. Okay. And one more form also we can write. These two forms only is important for you. It is nothing but this two is important for you. That is nothing but capital is equal to assets minus liabilities. Otherwise, we can write as capital plus liabilities is equal to assets. So this dual aspect concept we can express in the equation in this form also. That's why I said that before only, that dual aspect concept is also called as balance sheet concept also. Okay?
Yes.
Any doubt?
No, ma'am.
No,
Now,
ma'am.
shall I proceed for third one?
Yes.
Third one is nothing but the going concern concept. Coming to the going concern concept, accounting is done on the assumption that the business will have a long life.
Yes.
Whenever the people will do the accounts, they will assume that the business have a long life till they think to continue, till they think to dissolve it. The business will
Liquidity
continue.
time. Till
Okay.
liquidity time.
Till the liquidity time. So the business will run for a long time. For this reason, what they will do, whatever the fixed assets of the business will be there, that they will record at the original price. For this reason, what they will do, whatever assets they will purchase, they will write at the original cost, means कितने पैसे में खरीदे वो cost ही लिखते हैं वहाँ पर. And every year, what they will do, they will take out some depreciation. I think so. Everyone is having the idea of the depreciation.
Yes.
Yes,
What
ma'am.
is the meaning of depreciation?
Decreasing amount of asset.
Finishing.
The value of fixed asset.
Decreasing the amount in the fixed asset. So after 1 year, the value will decrease no in the asset.
Yes.
So what they will do, whatever the original cost of the asset will be there, that they will write, and every year they will find out the depreciation. And this is the basis for the next years also. They will not take here the market value. They will not show here the market value because they are not intended to be sold immediately. See, again I'm repeating, as per this going concern concept, they will assume that the business have a long life. Till they think to dissolve it, the business will have a long life. For this reason, what they will do, whatever the fixed assets will be there, that they will record at the cost price, not as per the market price. Cost price they will take, and every year they will take out the depreciation on the fixed assets. Okay, am I clear? The next one is the cost concept. Coming to the cost concept, as per this concept, and every asset is recorded in the books at the price paid to acquire. At the price paid to acquire. At the price paid to acquire means जब भी वो लोग कितने पैसे में खरीद रहे, एग्जैक्ट वैल्यू जो है वो वैल्यू ही बुक में लिखते. It is nothing but the cost concept. Whenever they will follow this type of concept, at time whatever the assets of the business will be there, they will record at what cost they have purchased, and this will be the basis for the subsequent year. Subsequent means जो आगे के साल रहते ना,
Yes.
उसके में भी same value लेते. So here the assets are not recorded at market value because market value goes on changing. Because the market value goes on changing. These changes, they will not show in the books. Again, I am repeating, coming to the cost concept, as per this concept, at whatever price they are paying for acquiring the asset, that only they will take as a basis for the subsequent years. They will not write the market value of the asset. As we know that market value will change from time to time, that they will not consider at what price they will purchase or whatever price they will acquire. That only they will make a basis for the next years also. Is it clear?
Yes, ma'am.
The next one is a
Ma'am,
money measurement.
ma'am.
Yes, ma'am.
Ma'am, what's the difference between going concern concept and cost concept? Like both are taking the
Yeah. It's similar only, ma. Under the going concern concept, what I said, that under that they will think that the business will have a long life, and whatever the assets will be there, that they will write, means whatever cost will be the that only they will write, and they will take out the depreciation. The cost concept, what I said, similar that also. That cost concept is how much price they have spent for purchasing the asset, that they will take as a basis. Okay.
Yes.
The next is a money measurement concept. Money measurement concept is nothing but, as per this concept, the transactions will make a record in the books which are expressed in money. Which are expressed in money. That transactions only they will make a record of that. Suppose if any happening or fact happened and which cannot be expressed in terms of money, that cannot be recorded in the accounting books. As per the money measurement concept, whenever the transaction has been taken place in the business, which are expressed in money, means where the money is affecting, that transactions only they will make a record. Suppose if the other things will be there.
Ma'am,
Suppose
if the goods are sold on credit basis, it will not be recorded.
It will be recorded. Why? Because when we are selling on the credit basis, later we will get the money, no? Yes or no?
Yes.
This will affect, means here money transaction is there. No, when they are selling the goods, definitely after few days they will receive the money. Here goods also going from the business, no?
Yes.
They will make a record. Other things like, suppose if the retirement of a management is there, as I said you earlier also, suppose if any quarrel is there between the employment and the management, these things also important, but these things they will not make a record. That is nothing but the money measurement concept. Am I clear, girls?
Yes.
Yes, ma'am.
The next one is,
like if the person is retirement, like how it will affect the business, ma'am?
It will not affect the business. What I am saying here, this thing is important for the business. This thing is important for the business, but this thing they won't record in the books. I am saying.
No, ma'am, that's
Whenever-
what I'm asking. Like how it's important for the business.
How it's important means, suppose one person is there and he's very efficient for the business, he's working very hard for the business, and that person is retiring, means the business will affect no here.
Okay. Thank you.
Like that. Okay, ma?
Okay.
So next is accounting period concept. Accounting period concept is nothing but, as I said you that the business have a long life and it will exist for a long period. So till the business will continue, we can't keep quite know that how much profit is loss is there and what is the financial position. We can't stop, no. So every time, one time to time, we have to find out that what is the profit and loss of the business and how to, and what is the financial position of the business. So for this purpose, what they have done, they have kept one accounting period for find outing the profit and loss and to know the financial position. This accounting period is nothing but 1 year. 1 year is nothing but in that 12 months. For every 12 months, they will find out that how much profit and loss the business has got and what is the financial position of the business. So whatever this 12 months and 1 year time will be there, it is called as a accounting period. Again, I'm repeating, as I said you that the business will continue for a long period. So till that time, they can't keep know that what results are they want to know that what are the results of the business. So for this, what they have done means they kept one period to know the value of the business and to know the profit and loss of the business. So whatever period they have kept, it is called as a accounting period. It is nothing but 12 months period for measuring the income of the business as well as to know the financial position of the business. So whatever this time interval will be there or whatever the time gap is there, it is called as a accounting period. And usually most of the concerns, they will follow the accounting period as from 1st
April to 31st
to
March.
31st March.
March.
Okay. And only few concerns, they will follow the accounting period as from 1st January to 31st December.
1st January to
1st January to 31st December. Only few. But mostly all the concerns, they will follow the, yeah, from 1st April to 31st March. Is it clear?
Yes, ma'am. Yes.
Yes, ma'am.
Okay.
Yes, ma'am.
Now next I'm moving to the conventions, accounting conventions. Coming to the accounting conventions is nothing but these are the customs, traditions, or practices which are followed by the accountants as a guide in preparation of the financial statements. Again, I'm repeating, accounting conventions is nothing but it refers to customs, traditions, practices followed by the accountants as a guide in preparation of the financial statements. So coming to the conventions, there are 4 types of conventions are there. It is nothing but first one is convention of consistency. I think so. Consistency means, as you know, consistency means what?
Without any error.
No.
Ability.
Continuous flow.
Stability. Continuity. Consistency means continuity. So here the convention of consistency is nothing but here whatever the accounting practices or whatever the methods will be there, it will be remain consist, means unchanged. It will
Year
not
by
change
year,
from
ma'am.
one-
Year
yeah,
by year,
yeah.
or
Year
period
by
by
year.
period to period.
year from one accounting year to another year.
Same consistency.
Yeah, same will be there. Means whatever methods they are using or whatever practices they are using into the business, means in the making the accounts, that will not change from one period to another period.
In financial performance also.
Yeah, that is nothing but it is called as a convention of consistency. In other words, we can say that accounting practices should remain the same from one period to another. Why? Because whenever they will follow the consistency, means suppose generally one example I am giving, suppose if for finding the depreciation they are using the straight line method. So when they are following the straight line method, suppose in 1 year they have taken out the depreciation, second year also they have taken out the depreciation, then it will be easy to do the comparison, no, from 1 year to another year. Suppose if the same method they are following, that time what will happen means the comparison of the results from one period to another period will be possible when only the same accounting rules are followed. Are you getting what I said? Suppose,
Yes, ma'am.
suppose in rare chances are there. Suppose if any change become necessary. Suppose if the change became necessary, that time they will make a change. If necessary, then only they will make a change. Otherwise, whatever the system or whatever practices they are following, same they will follow from 1 year to another year. Why they will follow? Because it will be easy to them to do the comparison from one period to another period. Okay. The next one is, second one is convention of disclosure. Convention of disclosure is nothing but here, generally, whenever they will prepare the accounts, in that the material facts should be disclosed in the financial statement. Material facts is nothing but the important things should be disclosed in the financial statements. Like one example I'll give here. Suppose sundry debtors will be there. So from the sundry debtors, total amount how much due is there, we can come to know. Yes or no?
Yes.
So whenever they are showing that sundry debtors, that total amount how much due is there that they are showing, but it should be disclosed that how many are your secured debtors and how many are the unsecured debtors. Secured means what? Secured is nothing but suppose if you are selling the goods on the credit basis and that person is giving some security to us. Suppose if that person is giving some security to us कि हम कुछ सिक्योरिटी आपको दे रहे हैं, आप जब हमको पैसे देते हम इसको फिर आपको वापस देते, like some asset or something.
Acknowledgement.
Yeah, then it is called as a secured debtors. Okay. Unsecured means those who will not keep, they are called as
Possibility of risk.
No, unsecured means those who will not keep the security, they will come under the unsecured debtor. So these things also they have to disclose. So here the full disclosure means here what I said here, whatever the information will be there, clearly they have to give. Whatever the facts will be there, clearly they have to give. But here, whenever they are giving this information, here that does not mean that disclosure of each and every item of information. What is important that they have to give. Here, full disclosure means disclosure of each and every item they should not give. Here only means that disclosure of such information which is important to owners, investors, and creditors, that they have to give. Okay? Are you getting?
Yes,
No,
ma'am.
ma'am.
Again, I'm repeating, convention of disclosure is nothing but here the accounts are prepared to give the important information to the users. So whenever they are disclosing, properly they have to disclose the information. Like suppose, as I've given the example that suppose how much amount is due from the debtors, that definitely they will give. Definitely they will give. But in that they have to show that how many secured debtors is there and how much unsecured debtors are there. That information also they have to give. So like that only other things also will be there, no? Just an example I've given that about the sundry debtors. Other things also will be there, no? Like suppose if they're making the purchases, in that how much cash purchase is there, how much credit purchase is there, that information also they should have, no? Yes or no? So this they have to disclose. So your disclosure means of whatever the uninformed means everything also they should not inform here. Which is important to the owners, investors, and creditors, that only they have to mention. That is nothing but the convention of disclosure. Then third one is convention of materiality. Convention of materiality is nothing but the significant. Actually, the meaning of the material is nothing but the significant. So as per this convention, a detailed record is made only of those business transactions which are material. As per this convention, detailed record is made only of those business transactions which are significant to the business. Means here whenever the accounts are maintaining, it should not be overburdened with the unnecessary minute details. Means as I said you that suppose if the debtors are there, in that suppose if the 10 members are there, the example I'm giving, as we have taken the example of the debtors, suppose if the debtors information is giving, out of that 10 members are there, उसमें से एक जना इतने पैसे दिए और एक जना इतने पैसे दिए, तीसरे जने इतने पैसे दिए, चौथे जने नहीं दे रहे, ऐसा everything should not give like this information because it's unnecessary for them. इतने पैसे दिए, he should not inform like this. How much amount they have collected from the debtors he should give, but हर एक इंसान के बारे में ऐसा सुनने का टाइम उनके पास नहीं रहता, like for the management. So that unnecessary things they have to avoid whenever they are maintaining the account. So only the material facts should be disclosed. In other words, we can say that an item should be regarded as material if there is a reason to believe and that acknowledge how would influence the decision of the informed investors, means which is important to the investors, which can be helpful to the management in taking the decisions. Like that information only they have to give. Unimportant manners means whatever the unimportant matters will be there should be left or should not merge with other items.
Ma'am,
Getting?
once you repeat the definition.
Once again, I'm repeating, convention of materiality is nothing but whenever they are preparing the accounts. In the business, many things will happen. So some will be important, some will be unimportant. Some will be important and some will be unimportant. But the thing which will influence the investors or the management, that things he has to give the that things he has to disclose. Means whatever the significant information will be there. Significant means whatever the important information will be there. That information compulsory he has to give. Are you getting?
An
Yes, ma'am.
item is considered as.
An item is considered, I should not say, I said that an item should be regarded as material if there is a reason to believe. Like suppose other things are there, and for that any belief is not there, means any evidence is not there, that things he should not give. Means whenever he is giving like that reasons, means whenever any fact is mentioning there should be some reason to believe that, and which will influence the decision, and which will influence the decision, that only he has to mention there. Whatever the unimportant matters will be there, he should not mix with this. Some disturbance I'm getting, so much disturbance I'm getting here. Mute, please. From where I'm getting this disturbance, please mute. Coming to the fourth one. Fourth one is nothing but convention of conservatism. Convention of conservatism is nothing but this convention is based on the policy of playing safe. Again, I'm repeating. As per this convention, this is nothing but this is the policy of playing safe. Okay, so what is the meaning of this? Means here in the business, whenever they are doing the business, what they will do means whatever the possible or the expected losses will be there. Again, I am repeating, properly reason. As per this convention, whatever the possible or the expected losses will be there, that should be provided. And whatever unearned means जो भी earn नहीं करे और अनरियलाइज्ड प्रॉफिट और जो भी आपको प्रॉफिट आने वाला है should be left out. Again, I'm repeating, as per this convention, all possible or the expected losses should be provided. यानी कि जो भी possibilities है losses आने के लिए और जो भी expect कर रहे कि losses हो सकते या फिर नहीं हो सकते, वो उसमें accounts में mention करना. वही अगर profits के हिसाब में गए तो अपने को किसी के पास से पैसे आने वाले हैं या फिर कुछ प्रॉफिट आने वाला है, उसको अवॉइड करना. यानी कि लॉसेस को अपन एक्सपेक्ट करना, बट लॉसेस को एक्सपेक्ट करना, बट प्रॉफिट्स वी शुड नॉट मेंशन हियर. ओके,
Okay, ma'am.
so for that one example I'll give. As per this, what they will do whenever they will do the valuation of the stock, what they will do here whenever they are making the valuation of the stock, here whichever the cost price or the market price they will take, and whichever is less, that they will take here. So what is the idea behind this convention of conservatism is that the financial of the firm should not be shown better than what it is. Again, I am repeating here, the idea behind the convention of conservatism is that the financial position of the firm should not be shown better than what it is. यानी कि जो भी बिजनेस है उसका फाइनेंशियल पोजीशन ज्यादा नहीं बताना, जितना है वही बताना. Are you getting? I'm not getting the answer properly.
Ma'am, can you please
repeat
it once again?
Yeah, that only I'm saying. As I'm not getting the properly response for this, but that's why what I'm doing again, once again, I'm explaining the conventions to you. Okay. So coming to the first one is convention of consistency. Convention of consistency is nothing but as per this convention, one minute. It means that whatever the methods the business is following, that they will follow from one period to another period same. Why they will follow the same? Because it will be easy to them for doing the comparison. Again, I'm repeating, coming to the first one, convention of consistency is nothing but as per this consistency, whatever the accounting practices and methods will be there, that will be consistent. Consistent is nothing but they will follow from one period to another period same. Why they will follow? Because for them, comparison will be easy. That's why for this purpose, they will follow the same practices and the same methods in the business. Coming to second one is nothing but convention of disclosure. Convention of disclosure is nothing but here whatever the material facts will be there, whatever the sufficient material will be there, it should be disclosed in the financial statements.
Ma'am, so much disturbance is coming, ma'am.
Yeah, I'm also getting, ma. Please mute, ma. Okay, now it will not come. So here convention of disclosure is nothing but here whatever the material facts will be there should be disclosed in the financial statements. Like as I've given the example of the sundry debtors. So here whenever, as I said you that they should give the full information about the material facts, means here whenever they are disclosing the things, every item which is unimportant data, so they should not mix here. Okay, the important which is important, the thing, the information which is important to owners, investors and creditors, that they have to mention. The next one is convention of materiality. Convention of materiality is nothing but as per this convention, a detailed record is made of business transactions which are significant. It means that whenever they are making a record of that, means whenever they are making the record of the transactions at time, which are material, which is significant to the business, that they have to maintain. Here, whenever the person, means whenever the accountant is maintained the account should not be overburdened with the unnecessary things, which is important to the business or to the management, that only he has to mention there. Okay, coming to the fourth one, convention of conservatism. Convention of conservatism is nothing but as per this convention, it is based on the policy of playing safe. This convention is based on the policy of playing safe. So as per this convention, what they will do, whatever the possibilities or expected losses will be there, that they should write. That should be,
Excuse me, ma'am. Can you again repeat
Which
fourth,
one?
ma'am?
Fourth only I'm repeating. Convention of conservatism is nothing but this convention is based on the policy of playing safe. This policy is based on the policy of playing safe. So as per this convention, what they will do, whatever the possible or the expected losses will be there, that will be provided, means that will be mentioned. Same in the case for the profits, what they're doing, whatever the unearned or the unrealized profit will be there, that should be left out. As per this convention, whatever the expected losses will be there, that should be mentioned. But whatever the unexpected or unrealized profit will be there, that should be left out. So the actual idea behind this convention of conservatism is that the financial of the firm should not be shown better than what it is. Okay? What, girls?
Yes, ma'am.
Yes,
ma'am.
ma'am.
Yes, ma'am.
Yes, ma'am.
Ma'am.
Yes, ma'am. Understood.
So how many of you have purchased my textbooks?
No.
Purchase, ma'am.
It is not available
How
in
many?
Our stock is not available.
No, how many of you
Because we
purchased?
don't know the publisher name.
Okay. No, how many of you
No,
purchased?
ma'am. It's not
Right now.
available.
It's not available. So those who purchased, they have purchased a new book or the old book?
New one.
Ma'am,
New
old book
So,
only.
Okay. 1 minute, ma. Those who have purchased a new one, just once you tell me the chapter names, ma. Those who have purchased a new textbook.
Introduction, journal ledger and trial balance,
Hmm.
subsidiary books,
Hmm.
bank reconciliation statement,
Hmm.
rectification of errors and depreciation,
Hmm.
final accounts.
This is the new book only, no?
Yes.
Actually, yesterday from the other branch, I got the information that the girls from other branch, those who have purchased this new textbook, in that depreciation chapter is not there. That's why I asked you. Okay, so no problem. You have purchased, the same syllabus is there. No problem. Where you have purchased, ma?
From Koti, King Koti.
Koti, no? Yeah, in Koti it's available. That only I'm saying. See, till now, as I said you in the first chapter, theory was there. I explained. Now this much thing only was there, and yesterday one more class will be there. In that, some theories that I will explain. But from the next class onwards, the problems will be there. Until or unless if you don't have the textbook, you can't understand. Question के बिना answer नहीं समझ में आता. Getting my point? Without
Yes,
questions,
ma'am.
you can't understand the answer. So it's necessary to purchase the textbook.
Ma'am, which series?
Series is not there, ma. Here you have to purchase the Pankaj publications.
Okay, ma'am.
But still, ma, I got the information from the head office also that they are saying not to purchase. I'll let you inform that what they will give again answer today. Because my subject is
Pankaj
totally dependent on the
Publications by
textbook.
R.P. Trivedi.
Yeah. So first I'll take the attendance, ma. So the girls from Malakpet, raise your hand. The girls from Malakpet, raise your hand. Okay. Lower your hand. Lower your hand. Now girls from Shalibanda, raise your hand. Girls from Shalibanda. Girls from Shalibanda. See, some girls, they are not answering. As I have seen that here total attendance was, participants were here beginning when I've seen it was 79. Now it came to 74. And when I have taken the attendance here 16 girls have raised the hand from Malakpet and 44 girls from the Shalibanda. Those are not answering, no, girls. It's your loss because already in the introduction class, principal clearly she said you whatever attendance we are taking, this we are sending daily to you. Suppose if you don't have the attendance, you will not get the hall ticket. See, already I said many times, only I'm giving 10 minutes of grace time for attending the class. But still some girls now also they are coming, see, for they are joining now also class. What I should say? Okay, ma. So in the first chapter, one more topic is there. That is nothing but the accounting standards. Okay, so after explaining this accounting standards, in the first chapter, theory will get complete. Okay, then we can proceed for the second chapter. So right now, because accounting standard topic also big, I can't complete in the 10 minutes time. That's why today what I'm planning, already I have given the notes yesterday for the bookkeeping and the accounting, right?
Yes, ma'am.
Yes.
Okay. So today I'm planning to give some more notes to you. Whatever I've given, you have learned. Yesterday
Yes.
itself I said no, it was
Yes,
very
ma'am.
important from the examination point of view.
Yes, ma'am.
Okay. As I said you earlier also, the which things are not there in the textbook, that only I'm giving to you in the notes. Okay.
Yes.
Now write next citing as objectives of accounting in the notes. Yes, no? Objectives of accounting.
Objective of accounting.
Objectives of accounting. Written?
Yes, ma'am.
First side heading. First side heading. To ascertain whether the business operations, to ascertain whether the business operations have been profitable or not.
Have been after, ma'am.
Have been, not has. Have been profitable or not.
Ma'am, can you please repeat once?
Okay, ma'am. To ascertain whether the business operations have been profitable or not. Over.
Yes, ma'am.
Under that you write. Accounting helps us to know. Accounting helps us to know.
Help us to know.
Again, I'm repeating. Accounting helps. HELPS helps us to know whether a business has earned profit,
As
or
earn or earned.
earned, EARNED, earned profit, or suffered loss,
Ma'am, repeat once again. Accounting
help us to know whether a business has earned profit or suffered loss. Written?
Yes, ma'am.
Suffered loss during the accounting period. During the accounting period. During the accounting period. It will give us an idea of efficiency. It will give us an idea. It will give us an idea
Idea of efficiency.
of the business. Efficiency
of the business.
of the business. Please stop. To determine profit or loss. To determine profit or loss of the accounting period. To determine profit or loss of the accounting period. A trading and profit and loss account.
Accounting period.
After that, a trading and profit and loss account. A trading and profit and loss account.
Trading.
Trading and profit and loss account, or trading and profit and loss account, or an income statement is prepared. income statement is prepared an income statement is prepared by matching revenues and expired cost. By matching revenues and expired cost.
Matching revenue.
Matching revenues and expired 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 cost.
Expire cost.
Expired cost. Thus, first of all, revenue is determined
Determined.
Determined and then expenses and then
Determined.
and then expenses incurred for earning the revenue are matched. Earning the revenue are matched.
Earning the revenue.
Matched, then
Matched. The difference.
Them expenses.
Expenses. I didn't say expenses.
Differences.
Ma, where you are, ma? Is determined and then expenses incurred for earning the revenue are matched.
the difference.
The difference known as net profit or net loss. Net profit or net loss. Over?
Yes.
Now
Yes,
second
ma'am.
one. Second one, side heading. To ascertain the financial position of the business. To ascertain the financial position of the business.
To ascertain the
Financial position of the business.
okay, ma'am.
Underwrite, right? Balance
Yes.
sheet or position statement. Balance sheet or position statement.
Balance sheet.
Or position statement is prepared
Is prepared
to give an idea of the financial position of the financial position of the business on a particular date. On a particular date. The financial position of an enterprise. The financial position of an enterprise.
The financial position
of an enterprise
Of an enterprise is indicated
is indicated
by its assets
by its assets
by its assets
Indicated.
on a by its assets on a given date by its assets on a given date and its liabilities on that date.
on that date.
Excess of assets
Assets over
over
liabilities.
liabilities represent the capital
Capital
and is
and
indicative of the financial soundness
indicative
indicative of the financial soundness soundness of an enterprise.
Ma'am, please repeat it once now, ma'am.
Okay,
From
ma'am.
the capital.
After capital and is indicative 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 of the financial soundness
of an enterprise.
of an enterprise. Now coming to third one, side heading, to generate and communicate information to communicate information to the users.
Communicate in
To generate and communicate information to the users. Accounting records generate and communicate information. Accounting records generate and communicate information.
Records generate
And communicate information which may be helpful
Side heading.
Ma, see, that much time is not there. Ma, only 1 minute left and having the next class. That's why
which
write
may
fast.
be
Ma.
helpful.
Which may be
Ma'am,
helpful to
after
various
communicate. Ma'am,
persons.
after communicate.
Communicate information which may be helpful to various persons in planning. Various persons
in planning,
control, evaluation of performance,
evaluation,
evaluation
evaluation of performance and decision making. Okay, ma. For today, this much is enough. In tomorrow class, next topic I'll explain, and this object is also why I have given, because this is also very important from the examination point, objectives of accounting.
Okay, ma'am.
Okay?
Okay.
Done this. Okay, ma. Bye.
Bye.
Girls,
Yes, ma'am.
Yes, ma'am.
please explain this once. Financial soundness of.
What you want to explain?
Explain now. मेरे को एक point बोलना था अभी. Financial soundness of. Lubna. Second.
Performance and decision making. Financial performance and decision making.
soundness.
Financial soundness of an enterprise.
Okay.
Third point,
And
to generate and communicate information to the users.
first one, incurred for incurred for
Where you are.
first point to ascertain whether business operation have been
Then
expenses incurred for
expenses
last
Incurred for earning the revenue.
are matched.
incurred for
Earning the revenue.